Hey traders, this is Christian Fromhertz, CEO of Tribeca Trade Group with your end of day recap from Monday. So on a shortened trading session, some very interesting moves I would say for the day. So first day of the month, and I do think that we saw some first of the month trade flows that kind of came into the market. You could see small caps outperformed, mid caps outperformed, but I don't know, maybe they cut this trade off a little bit early today. But no doubt, it looks like there was some nice buying going on in those areas. But you can kind of see what happened here with futures. You know, we started the day session up about 40 basis points, and you can see we're still selling off here, giving back all those gains. So the main, we'll start with the bad first. The Nasdaq continues to break down. So I mean, look at this thing, still going down here, down 1.2% for the day. So as much as I wanted to kind of, maybe to allude to the fact that we might find some support in here. Well, we've started the month now and we've broken below value. So first day of the month, new value area, and we've got a clear break below value. That is a bearish sign for tech shares and for Nasdaq. So they've been having trouble now for the last couple weeks, but this is a firm breakdown. Next area of support, we've broken this 56.51 level in Nasdaq futures. Next area of support is the 100-day moving average. And notice that you have this purple VPOC line. If the 100-day moving average doesn't hold, that could be where we're headed here, which is down to basically 24.17, another couple 100% down. So it is what it is. It is breaking down. I thought that we may hold the 50-day moving average. We weren't able to do that. We weren't able to really fight back hard, especially when you start the day in positive land and then it just gets sold. So, this has been going on now for the last, week, since basically here, where we tried to go higher and failed. So I think that was towards the middle of last week, I want to say. But so same thing in the Qs, same looking chart, except you can't see the Qs sell off here after hours as Nasdaq is doing. But 132.33, if we can't hold the 100-day moving average, that could be where we're headed here. These VPOCs, version point of controls, where price never actually hit before. So that's why it's called the version point of control. This level has never been touched before, where a lot of buyers and sellers met up. If we can't hold this 100-day moving average, I think this may be where we're headed here in Nasdaq. So, and it just kind of gets worse looking at this group. Besides the Qs, if you look at internet shares, they also look like they're breaking down 90 basis points for the day. They're right at the bottom of value. So they haven't broke there, but I would watch for a breakdown there. Look at the semis; they're already there to the 100-day moving average. So another nasty day. These started the day they were up about 0.5%, and they gave back all of the gains and sold off another 1%. So we did see a little bit of call buying come in here. I would say a little bit of knife catching. Micron saw some calls go up. These were swept. But again, we've been seeing Micron calls for over the last month at least, and they haven't worked. So I don't really know what they're up to at this point. These are all opening trades in Micron. So maybe somebody thinking that it's gone a little bit too far, too fast to the downside. Also Applied Materials, which actually was okay today. It looked like there were some calls that were bought going out to the January 48 calls. So you want to see if anybody is going to be buying some of these names as they're getting slaughtered here, and quickly. So definitely, I would say either the escalator or the elevator down here in semis. Hit a high. I mean, look at this bearish engulfing candle from back on 6/9. We were at $89, so we've shed 10% basically in about a month. So it's been a pretty steep correction. So people always look at corrections, and they always look at the major indices, and they're like, oh yeah, we haven't had a 3 to 5% correction. I mean, look at semis from top to where we are now is a 10% correction. And quickly, in a month. So some areas have had corrections. So whether or not we get this in the overall index, I do think that it's more troublesome than energy going down because tech is such a big portion of the major indices. So I mentioned this earlier today. I said when the Qs reversed and we're down about 70 or 80 basis points, I said watch for spies to go down too because they can't. Such a large component of the S&P, it's really difficult for it to stay immune to that move in technology. It's just too big of a weight in the overall index. So, so that's the negative. I think I kind of covered that pretty thoroughly. What else was down today? Some home builders were down today. So the other thing that was pretty crazy today, besides seeing that go on, is the move in interest rates, right? So interest rates continue to climb here. This is the bonds. This is the 30-year bond, and you could see that they were flat to up a little bit and got rejected right at the value area and fell down pretty hard. So you have to think about what happens when bonds sell off and interest rates go up. This is not a crazy leap of faith here. Financials and banks go up, and banks finished off the highs a little bit here. We did see what I believe is a call buyer in the KBE ETF. What is KBE? It's all banks. So there's a regional banking ETF, KRE. KBE is all banks. So these were the August 43 calls that went up. And you look at this chart here in the banks, and they do look like they are trying to break out at this point. So it did close above value for the day. We've also been seeing a lot of call buying. We saw some call buying on Friday in Citigroup. We saw a little bit more of it today as well on the highs. So some July 770 calls went up. Not the biggest orders in the world. This order may have been sold, so they may have sold some of this. But so for now we've got the banks moving up, and as long as interest rates are moving up, I think that's going to happen. So let's take a step back. Why were interest rates? Why did they fall apart today? Why did bonds sell off? Well, if we look at the economics that came in today, it was pretty darn strong. The ISM manufacturing number was a 57.8 versus 55. That's a really bullish gauge of ISM. The ISM is a leading indicator. Much more important. Last week we had GDP. GDP is in the past. GDP is last quarter. It's a lagging indicator. ISM is a leading indicator, so that's pretty strong. Prices paid came in less, but look at new orders, 63.5. Really a standout number for ISM manufacturing. So that will cause interest rate bonds to sell off and interest rates to go up. Also, gold got taken to the woodshed as well today. So look at this thing. It was the 200-day moving average was being defended here for a little while, and I apologize. I took off the 200-day because a lot of these things are approaching the 200-day. But if you look at the 200-day moving average with gold, you could see for about a week or so it was kind of hanging in there. But that this is a breakdown, down 1.8% in GLD. So other areas that have been moving up, we talked about in the weekend newsletter. My trading system was down. I'm not going to call out this broker, but they had an issue, which really kind of held me back from trading a bit today. But take a look at this wheat ETF. If I've got the right symbol up, there we go. We talked about this week. This is a full-on breakout in wheat, just from $7 to over 8. So a huge move in the last couple days. And you take a look back at the 5-year chart. This looks different. This looks different to me than previous breaks above the 200-day moving average and kind of a whipsaw move, but failed. You didn't really see any of the moving averages. Maybe the 50. The 50 did cross over the 100 and the 200 here briefly and then checked back. But, it could be, I wouldn't say it is different here. It could be different here, right? We don't know if this is going to be maintained. But, wow, what a move in wheat. Also, soybeans. Again, there's ETFs for these things that have futures contracts. But a nice move from soybeans from low to high here. And then there's also a corn ETF as well that you could look at. So also above the 200-day moving average. So what did I do today? When my trading system did come back up, I went long CF Industries. Real nice move. Easy trade for me. A move above the 200-day moving average. So that'll be my stop. Will be right below the 200-day moving average. But I started to look at agriculture names with those moves in those agriculture commodities. I like the Moo ETF here too. Unfortunately, the options, if you're looking to play with options, are going to be atrocious, and it's a $55 stock. I chose to buy CF in cash, not in options, and to kind of play that as a trend and see what that's going to do. But I like this chart very much. I think it just is going to have to be, if you like the agriculture ETF, unfortunately, it's most likely going to be a cash trade because the options are like silly how wide they are. So that was the positive. So I kind of went over both. Energy continues to go up. I actually had a chart of XLE, which I just took it away. Energy is at an interesting point. I think we got higher than the 50-day moving average today. I don't have so this has been in a pretty decent channel here since last year, declining channel. Let's see if it can break out of this. So, I don't have to. I don't think it'll take me too long to draw this for you, and you could probably see it with your eyes here. But if you take a look at this and just kind of draw a trend line, you could see we're butting up against this trend line. So decision time, 50-day moving average, so still way below the 200-day moving average. But we did see call buying last week. We saw some call buying right at the end of the day in Halliburton, which kind of looks the same as the XLE chart. Other names that we saw some call buying in, Morgan Stanley, we saw some call buying in. Rio, that was probably, I would say, the trade of the day. We also saw some call buying in Win on today's dip. So they went out to August to take advantage of the dip in Win. Rio is just, is another name that looks interesting. I did not take this trade today. It was up already it was already up about 2.5% when the call buying started, but I already have longs on it in the space, so I don't really want to load up too much more. I'm long SLX on the break of the 200-day moving average. That's the steel name, and that's working out pretty well. So that's it. I'll leave it there, and I would say the rotation continues. How long is it going to last? You don't know, but clearly with Nasdaq down 1% and small caps up almost the same, almost a 2% differential between the Nasdaq and between the Qs and IWM. So clearly there's some shifting going on, which has been going on for the last couple weeks. So that's it for today. Have a wonderful 4th of July. Have a great 4th of July, and also be very safe. So thanks for watching today's video, and I'll see you guys back on Wednesday. Thanks very much.